So, um, this chart of accounts, list of accounts, when you're using an accounting software like QuickBooks, you have to input this, right? You input this into QuickBooks. But now, here you are using Excel, okay? And we have these transactions. You want to enter this transaction into, want to enter this into our system, which is, or our software, which is Excel. Okay, we want to have a GL here, general ledger here. Okay, so what do we want? Um, One, in the GL, we have date, number one. Number two, we have account. Number three, we have account description, account description. Okay. Number three, we have a description of the account or of the transaction. Then we have amount, whether debit or credit. Right, right. Or let me just put here uh, amount, amount, debit, and also amount, uh, credit, credit. Right. So, what do we do now? Okay. So we know for each transaction, uh, there has to be uh, a debit and a corresponding what? Credit. Right. So, for the account and account description, we know that here under examples, when we get the account here, the description should automatically come. Okay. So, and also let's add the account type. Okay. So let's add the account type, Control Shift plus. I put the account type. All right. So what I'll do is I'll say equals X using the X lookup function. Lookup value here, comma. I'll go to example. This is the lookup array, comma, and the return array, enter, like that. All right, so here's what will happen. On the first of, and also here the same, if I do the X lookup, uh, X lookup, lookup value, comma, I go to example, lookup array, and account type, enter, like that. So what will happen is, once I put account here, let's say 10,000, automatically figures will come there, right? Right, so let's try. Let's start with the first transaction. What happened on the 1st of January? The owner invests cash into the business. Okay, what's the description? The owner invests cash into the business. Okay, that's the description. Okay, how much was it? The money is 500,000. So the owner put 500,000 into the business. Okay, let me format let me format these two columns. Okay. So if you put money into the business, what is happening as your owner? What will happen? You increase what? Cash. Okay. So what's the account for cash or bank? The account for cash is 1,000. You put enter there. So automatically cash and asset will come. Okay. So it will be on the same date, January. Um, which account are we crediting? Okay. We credit what? Capital. So what is the account for capital? You go to your chart of accounts and search for capital, owner's capital. So it's 3,000. You put it like that, and then you credit it. So this is what? This is our GL in Excel. And we do the same for the what? For the rest of the what? Of the transactions, right? So we have 20 transactions. So what I'll do is I'll do up to 10 transactions. And the rest, you can what? You can practice, right? So let's do for the other transaction. When was that? The other transactions was on the 2nd of January. Okay. What did we do on the 2nd of January? We purchased inventory on credit. Okay. We purchased inventory on credit. So what are we debiting? What are we crediting? So if you buy something, oh no. If you buy something on credit, okay. If you buy something on credit, what are we creating? What are we creating? We are creating what? Um, we are creating a what? We're creating a payable or a liability, right? So how much is the figure involved here? We're talking of 150,000. Okay. Debit, credit, 150,000. You put the description there, and then let me copy it down. Just select down, control D. Yes, I'll go down, select control D. All right. So what do we debit? We debit inventory. So do we have inventory there? What is our inventory account? It's 1,200. So you put there inventory, and then you credit what? You credit liability, which is what's our liability there? Should be accounts payable, right? That's our accounts payable there, right? Then we go again for the next transaction, which is on the 3rd of January. So on the 3rd of January, uh, what did we do on the 3rd of January? What did we do? We bought office supplies for cash. Okay. We bought office supplies for cash. So one account we debit, and the other account we what? We credit. Okay. So if we vote for cash, that means cash, we're losing money. So money is leaving the business. So you credit what? You credit cash. So this is the account, cash. And then you debit expenses, which is office supplies. So let's go to the chart of accounts and see where we have our expenses, our office supplies expenses. So we have 5,400. You enter that, right? That's on the 3rd of January. Let's go again. On the 4th of January, we paid monthly rent. Okay. So let's do the double entry. Let's do the double entry on the 4th of January. Where is that? Okay. On the 4th of January, we paid monthly rent. Okay. We paid monthly rent. We debit one account, we credit another. So how much is the figure we're talking about? It's 30,000. So when we pay monthly rent, uh, what are we debiting? What are we crediting? So if we pay by cash, it means cash is leaving what? Is leaving our business, right? So when we pay rent, it means we debit what? We debit our expense, which is what? rent. So let's go to the chart of accounts and see where rent is. Rent expense 5,200. Right. Let's go to the subsequent day. That is on the 5th of January. On the 5th of January, what happened on that date? On the 5th of January, what happened? We purchased equipment. Okay. We paid half in cash, balance financed. Okay. So we go to the, okay, we paid, let me just wrap it. Okay. So here we're saying, this is a bit complicated. If we purchased equipment 400,000, it means we'll debit equipment. That's an asset. What do we credit? We credit cash, but we did not pay cash in full. We paid half. So half of it will go to cash. We'll credit bank or cash. And the other half, we create what? A liability. We're creating a liability. Okay. So we need to have we'll have three lines under that. And then we have okay. Number one, we debit uh, we debit the asset. So where is the asset account? Equipment 1,400. The code is 1,400. We debit with how much? We debit with 400,000. Okay. Then we credit cash. We credit cash by how much? Half. So half of it is going to what? We're paying it. So the other half is what? Is a liability. We have not yet paid for it. Okay. So you look for where liabilities are. Okay. So we have accounts payable, accrued expenses, and bank loan. Obviously, that big procurement, you have to finance it through the bank loan, through the bank. So it will go to what? To bank loan. Right? And then on the we're done with that. Oh, sorry, we're not yet done. So you conclude that transaction with the other credit. Right. Let's go to the subsequent date. That is on the 60th, 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 60th of January. Let me just format this. Is it going to work? Okay, yeah, on the 60th of January, we have two transactions. Uh, Sold goods for cash. Okay, sold goods for cash. So if you sell goods for cash, okay, we'll again credit one account and debit what? Another account. All right. So if we sold goods for cash, it means we will receive what? Cash. So what will happen to so here it will be cash account debit. What will happen to the credit? The credit will go to that revenue because we are selling, right? So we go to the chart of accounts. Where's our income? Sales revenue. That is 4,000. Right. So we go to the other transaction, which is on the 7th of January. Okay. Sales revenue. Okay, this one should be on the 60th. Be on the 60th. Okay. Then we have on the 7th of January. What happened on the 7th of January? We sold goods on what? On credit. So if we sold goods on credit, What do we debit? What do we credit? So obviously, we sold goods on credit. We debit one account, and also we credit what? Another account. Right. So, um, if you sell on credit, it means you are creating what? Debtors, or uh, it is called in some jurisdictions they call it accounts receivable. You create debtors or accounts receivable. So, so you debit debtors or accounts receivables. So let's go to assets. Where do we have accounts receivable? There, 1100. Okay. What do we credit? We credit sales revenue. Okay. So we credit sales revenue. That's on the 7th. Let's go to the 8th. What happened on the 8th? Okay. On the 8th of January, what did we do? On the 8th of January, we paid what? We paid salaries. We paid salaries. Okay. So we credit one account and we debit what? Another account. Okay. So when we paid salaries, so what do we do? When you pay, okay, let me copy the formula down. Control D. Let me copy it down. Control D. So when you pay salaries, it means obviously cash will be involved. So you credit cash. What do you debit? You debit an expense, which is what? Salaries. So you go to the chart of accounts and see where there are salaries. So you have salaries expense, that is 5100. Okay, let's go to the other date, which is on the 9th. Okay, what happened on the 9th? Okay, on the 9th, what we're talking about, okay, on the 9th, we provided services on credit. Okay, so if we provided services on credit, what are we saying? Somebody hired us to do some service, but they did not pay us. So what is that? It means we're creating what? A receivable, okay, or debtors. We have debtors, those people who owe us money, right? So you go to the chart of accounts and see where there's what? Accounts receivable. You debit the accounts receivable, or this is also called what? Debtors. Okay. What do you credit? We credit obviously sales. But what kind of sales? Let's go to the chart of accounts. Okay, so there is service revenue. There are two types of revenue here. We have sales revenue and service revenue. So you credit service revenue because uh, we are told that the kind of revenue we're talking about is through a service. And lastly, let's talk about the final transaction, which is on the 10th on the 10th of January. Okay. Customer paid part of outstanding balance. Okay. So on the 10th of January, what happened? On the 10th of January, uh, the paid customer paid part of the outstanding balance. Okay. So where is the 10th? We have 30,000 of another 30,000. Okay. So if a customer paid part of the outstanding balance, what do we debit? It means um, we received that 30,000, right? So we debit cash. And what do we credit? We credit because we want to reduce the we are reducing the debtor's figure or the accounts receivable. So in this case, we credit the accounts receivable. Okay. So we credit the accounts receivable. So this is our general ledger. Okay. So any system you know, okay, be it ERP or non-ERP or web-based or desktop, this is what happens in the system. This is the general ledger. Okay. So once you have prepared the general ledger, what's next? You create a trial balance. So let's create a trial balance. How do you create a trial balance? There are so many ways. What I can do is I can convert this range of data into a table. Okay. So let me convert this into a table. Okay. So this is a table, right? This is a table. And I'll say, okay, my table has headers. Uh, Let me remove the style there. Okay. So to know that the double entry is correct, first of all, the debit must be equal to the credit. So let me quickly do the totals. So you go to table design and then total row. Okay, here the total is 960, and I'm also expecting this total to be what? To be 960. Right. So if you have to prove equals this amount equals that amount should be true. Yes, it's true. All right. So let's create a trial balance from this. How do we create that? Using pivot tables, right? So what will I do? I'll just go to insert pivot table, um, new worksheet. Okay. Uh, on this new worksheet, let me just drag it. Yeah, can be here and rename it trial balance. Okay. So let me delete that. I don't need that. Okay. So in this trial balance, trial balance, what I'll do is I'll need um I'll need a list of my accounts, the description, and also the what? The account type. Okay. I'll need the list of account, and perhaps account type, um, then the amount. Okay, amount, that is the amount DR and amount CR. So this is how I want my trial balance to look like. So what is a trial balance? Simply, a trial balance is a list of your accounts with their balances. And at the end of the day, the total of those balances should be what? Should be zero. Okay, so let me delete that and go to my pivot table and select where is account. I'll drag, I'll go to account. There is the account and drag it to rows. So these are my accounts. Okay, and then let me get account type. How will it look like? No, it doesn't look nice. Okay, I remove field. Okay, then you have the the amount debit, the amount credit, Um, okay. And also I need, okay, so this is the movement. So I now need another column to show my real balance. When I do this figure minus that figure, what will it give me? Okay. But for now, let me format this. Let me format this. Pivot table, pivot table. Okay, field value settings. Let me format the data. Okay, number formatting, put number. Okay, like that. Okay, value field settings, number format. Okay, then I add another column. So what I'll do is I'll go to pivot table analyze, then calculated field. Then what will I do? So that one will be balance. Okay, that one will give me my balance. So what will happen? So what is the formula? So it is the debit minus the credit. So it will be debit amount instead minus credit amount instead. Okay. So if I want to remove some of those words, okay, okay, just a minute. Let me just I don't want those some of those figures, or rather some of those amounts. Okay, what are we saying? Okay, okay, let me just edit. All right. So this is our pivot table. And for the account type, what happens if I put it like that? No, it doesn't look good. More fields. What if I put it under columns? Doesn't look good as well. Yeah, but there are so many ways you can present this data. Okay, anyway, let me put it under this one. Yeah, so this is how the trial balance will look like. And also, if you want to add some perhaps field settings and that one. Yeah, the page layout. No, 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 not that one. Sorry. Okay, show details. No. Okay. So in short, I don't know if I can format it further. Yeah. So yeah, this is it. You have your account there. That's the balance for assets or 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 this account, uh the 1000, that's the account. Account type, account description. Okay, let me remove the account type. I don't think we need that. Let's put the account description. Okay, yeah. So yeah, we have this account description. So the cash, our cash balance is minus 90,000. We're not in a good position because we have this means that we have an overdraft at the bank. Okay, accounts receivable. Okay, we have debtors with 90,000. Okay, we can collect this cash 90,000 to clear this one, this overdraft. That's what it means for these accounts. And then we have inventory. We have to sell this stock or inventory. to what? To have a good balance at the bank. And then you have accounts payable, short-term loan, or rather short-term liabilities, and then a bank loan of 200,000. The owners of the business put in 50,000. There's a sales revenue of 200, service revenue of 40,000, salaries 50,000, rentals 30,000, and office supplies 10,000. So it is from this trial balance that's when we get what? The financial what? Financial statements. That is the income statement and the balance sheet. Right. For now, let me stop there. Thank you.